Can husband and wife legally cut up to 50% of their taxes by owning a joint property? Well, the answer is yes. In this video, I'll show you how joint property taxation actually works for couples, how majority of them mess it up, and how couples can use them to save taxes. Let's start with the foundation. Imagine Rahul and Neha are a married couple and they together buy a house for 80 lakhs. The sale consideration deed mentions that Neha owns 40% of the house while Rahul owns 60% of the house. Second, where couples go wrong. Let's take Neha and Rahul's case. In this case, the sale deed mentioned 40:60 ownership split. So as per law, Neha should pay 40% and Rahul should pay 60%. Now let's assume that the EMI is 1 lakh rupees, but in this case, Rahul pays the entire amount. So in the eyes of the tax department, Rahul is the sole owner of the property. Because for tax purposes, who pays is more important than what is mentioned in the tax deed. So ideally, both the spouses should pay separately from the separate bank account to avail the tax benefits. Third, home loan interest deduction under section 24. Now let's assume that Neha and Rahul are doing it the right way. Both of them are paying their share separately via separate bank accounts. Now let's assume the interest for the year is 4 lakh rupees. Neha being 40% owner, the interest sums up to 1.6 lakh rupees and Rahul's share sums up to 2.4 lakh rupees. As per section 24, Neha can claim the entire 1.6 lakh rupees as a deduction, whereas Rahul can claim only 2 lakh rupees, which is a total deduction of 3.6 lakh rupees. But if Rahul would have been paying the EMIs single-handedly, then only a deduction of 2 lakhs would have been permissible. But as these guys are joint owners, a total deduction of 3.6 lakh rupees, that is additional 1.6 lakh rupees, is allowed as per the income tax laws. Fourth, principal repayment deduction under section 80C. In the current scenario, let's assume that the principal repaid during the year is 3 lakh rupees. Neha's share being 40%, it sums up about to 1.2 lakh rupees and Rahul's share sums up about to 1.8 lakh rupees. Under section 80C, Neha can claim the entire deduction of 1.2 lakhs, whereas Rahul's deduction is capped to 1.5 lakhs. But in the same scenario, if Rahul would have been the sole owner, then the deduction would have been stopped at 1.5 lakhs only. But in the current scenario, the total deduction claimed by both the parties in this case is 2.7 lakh rupees. Fifth, how rental income is taxed in case of a joint property. Let's assume these guys give the house on a rent for 6 lakh rupees per annum. Now as per the ownership split, Neha gets 2.4 lakh rupees and Rahul gets 3.6 lakh rupees. First, they get a standard deduction of 30% individually. On top of that, they can claim the interest that they have been paying in case they have a home loan. Now let's assume Rahul was the sole owner of the property. The entire 6 lakh would have been added to his income and on that he would have gotten a standard deduction. By being the joint owners of the property, this helps the income to get divided before taxes and also helps them to show each other individually in lower tax brackets. Sixth, capital gains when the house property is sold. So what actually happens when the house property is sold? The gains realized from the sale is split between the partners on the basis of ownership ratio and each partner is taxed only for his share of profit, which can again be reduced to nil if they invest in another house property or invest in capital gains bond within the required time period. 7. TDS rule in case of joint property. The last rule which often catches people off guard is the applicability of TDS in case of property purchase. The 1% applicability of TDS is in case of owner's share and not on the entire value of the property. So for example, if the entire value of the property is 50 lakhs and the individual owner's share is less than 50 lakhs, then TDS may not apply at all. This makes a very big difference in case of joint ownership. So if at the end of the day, the individual ownership cost of the property is less than 50 lakhs, then TDS may not apply at all to any of the owners. 8. Documentation that actually matters. Always remember that all these tax benefits actually work if the documentation and paperwork are systematic. So always remember that 1. The ownership ratio should always be mentioned in the sale deed. Second, both the spouses should be clearly co-borrowers of the loan. Third, both the spouses should individually pay from their separate bank accounts. And last, all the basic documents such as the loan documents, TDS receipts, and all the other kinds of documents should be in place. Always be sure of your documentation, because these documentation will always help you get the tax benefits even during scrutiny. So yes, owning a property jointly makes a lot of sense for couples, as it saves a lot of taxes. So next time you want to sell or buy a property, do remember us. And if you have any confusion relating to this, do drop a comment. Our experts at TaxBuddy will get back to you at the earliest. Till then, like, share and subscribe to the channel TaxBuddy.